Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli, and today I
Tessa
have Tessa
with
with me. All right, Tessa, it's been a great day, and in fact a great couple of days on the market. This pivot party that we're having in terms of the
We're
Fed.
still celebrating, aren't we?
We are, in terms of the Fed saying, look, they are done with rate hikes. And you've also just seen some incredible strength in commodities. I was just talking to Daniel Hines from ANZ about some of these big moves. So that is, of course, powered our resource-heavy market.
Absolutely. That is the main story. In fact, that is, I think, the sector that's doing the best today. If we can look at what the ASX is doing, it is up, materials leading as we expected. And only A-REITs and utilities are not doing well there.
Yeah, absolutely. It's been a really good day. We'll just have a quick read on where the ASX 200 is. 0.7%, 7,432. And the CBO, as you can see on your screen, up by about 0.8%. So really, Tessa, when we get to the three themes of the day, it has been this risk on rally. I mentioned oil up 3%, gold above $2,050, iron ore continuing to power as well.
Absolutely. So yeah, we've talked a lot about Fortescue in the last few days as well. That has been performing really well, and I think you think it's going to continue till next week, and seeing where
I don't know. I'm
I'd love
not
to
an
see that. I do want to know where this is leading us, because I think that's what a lot of investors are just looking for guidance at the moment. So yeah, risk on rally, definitely markets. Not just here. Asia Pacific is doing really well as well today. All the other
Hong
Asian
Kong
markets
having a great day.
Yeah.
But speaking of Hong Kong and the overall China picture, I mean, it was a little bit mixed. We know that there has been a lot of stimulus coming through from the Chinese government. Retail sales up 10%. They were a little bit weaker than what the market was looking for. And then you had such a big data dump out today as well. We had industrial production and a number of
I think
factors.
aluminium output was pretty okay, but overall the property sector is still struggling. You've had below expectations for retail sales. I think that's what the miss was. So there's still a lot of calls for stimulus measures to keep going. They haven't found that momentum. I think that's what they've been looking for this year, and it just didn't happen.
And indeed, because they had that big event a couple of days ago too, and no major stimulus was announced there. But all of this flows through, I should say, into the Aussie. I mean, a lot of it is a weak dollar story, but we are very tied to China. We're very tied to commodities. The Aussie dollar at 67 cents. I mean, when you think there were calls, Tessa, a couple of months ago that we could fall below 60.
Lowest, exactly. I was looking at that, obviously, because I still have some foreign currencies. Just looking at where the Aussie dollar was, it was at around 63, wasn't it? And hitting a low, and now look at where we are, above 67.
Yeah, and calls for above 70 as well. So go Aussie, go. Let's have a quick look at some of the sectors. We touched on the mining players. Fortescue has hit another record. If we can just bring those stocks up so we can see where they are trading. I think the computer's having a little bit of a hard time keeping up with my mouth, but I will tell you where Fortescue...
Well, Fortescue has been doing well. Rio and BHP as well.
Fortescue, $27.82. BHP is up by 2.2%. At there we go, BHP $49.31. Rio having a great day as well. And I think the reason this chart is not working, we have asked for a fix, but it still hasn't happened. Newmont is no longer, so that's why that chart was having a bit of a moment. Newcrest, I should say, is no longer. Newmont, of course, is the stock that should be there, and it was up by about 2%. So we will once again telepathically say, can someone please fix that chart? Let's have a look at the energy sector as well.
That, yes, as expected. You had oil doing well, energy, so Woodside, they're up by 1.34%. All the big names, all in the green today, as we've been talking about. This really has been powered by that Fed pivot party, and it seems to continue. Next sector, the interest rate sensitive tech sector. Let's have a look.
Absolutely, and I think that the key one was Block, so the Afterpay owner really rallying today, getting close to $111 a share. A little bit of weakness though, some from Xero and Tech One. Allkem also under a little bit of pressure.
Another one doing really well. Gold, where do we stop? Where I think the last I checked was above the $2,050 dollar mark, and that is doing well. Looking at our board here, Evolution Mining up by 0.81%, and just following that trend of materials, energy, gold, mining all in the green today.
Absolutely. So let's have a look at some of the key stocks in particular we're watching. We mentioned Fortescue there, really just powering the rally. So another record close. It did actually go above $28 during trade, but $27.82 there.
Yeah, and Australian Clinical Labs and Healius we have there. I find this a really interesting story, as in both of them we see them down. The ACCC, the Australian regulator, just blocked that deal, and so ACL backed out of that takeover of Healius, and of course that carries on to other M&A that we see in the market. Sigma Health, we've been talking about this all week.
Yeah, absolutely. So, as I think you put it really well, that Chemist Warehouse trying to get a backdoor through Sigma with this potential $8.8 billion merger. But when you look at the fact that the Competition Commission has said no to ACL and Healius because it would lessen competition, then is this $8.8 billion behemoth in the pharmacy world also potentially going to get
absolutely, and
blocked.
We saw the above, like reaching during trade, I think it was on Wednesday or Thursday, reaching above 75% rise in the share price. So that was, certainly investors looking at this thinking, will it get through? All right, and Elders today was the, stock of the day, we'll get to that later, but it had a significant protest vote at its AGM today. So 63% of its shareholders voted against the company's remuneration report. Another interesting tie to what's been happening this year with Qantas, and that has been front and center. Remuneration, will shareholders back pay? And we can see the effect, I think.
And I spoke to the Australian Shareholders Association CEO yesterday. She actually came in, and she was just saying like the power of the individual at the AGM season this year. I mean, obviously through something like the Australian Shareholders Association, but you have seen a lot of people stand up and say this is not okay that you take home these multi-million-dollar pay while we see our shares go like that.
And I listened to that interview. One thing I got out of that, she said the key message of the AGM season is if you are a company, you should engage with your shareholders because they've got so much power.
Absolutely. All right, so the stock of the day was Elders. Koshi speaking to a couple of guests.
And cattle are only around about sort of 15% of Elders' business as such. But what it does mean that if farmers are getting a higher price for their cattle, they feel better off. Hence, they might go and buy some more machinery. They might do this. They might get
and their farm goes up in value.
And their farm goes up in value, and things move. So watch the cattle price. It is a precursor to what the Elders' price will do.
If you lose money, it's too early.
Yeah.
We got out, which was a really good thing to do for a period of time, but of course it has bounced back.
Yeah.
I just put it in the too hard basket around here. Do I think it will go up and down 30% again over the next 12 months? Yes, it probably will. So I'd call it a trading stock. I'd call it a neutral. It's just, in terms of a business with a forecastable return and earnings going forward, we've all talked about the weather already at length. It's a bit of a coin toss. Yeah. I just find there's better places to have your money. But it will get too far sold off again. It does tend to do that.
All right, welcome to the COB, our Friday guest, Dr. Shane Oliver from AMP. Shane, have you got your pivot party hat on? Because what a rally we've been seeing.
We certainly have a massive rally. This pivot's been coming a long time. A lot of talk about it for, I reckon, more than a year now, that hopes that the Fed would pivot. We finally saw it this week, and it was quite a dramatic shift by the Fed. The general thought was that they would push back against market expectations for the extent of rate cuts through next year, but they didn't do that. If anything, they've given a green light to markets to keep going. And of course, that tended to swamp the somewhat less dovish, perhaps more hawkish message from other central banks, such as the ECB and the Bank of England. But it certainly put a rocket under our share market. We're up 3.5%, I think, this week or thereabouts, depending on where we settle for the day. And of course, it's made our market look somewhat more respectable on a year-to-date basis, whereas before, when I looked at it a week or so ago, it was only up 1% year-to-date. So it's looking a lot healthier, even though it's still a laggard.
Yeah, and Shane, I was looking at your report today, and you say, look, there's more good news on interest rates with central banks seeming to hold. But if we saw the ECB and the Bank of England kind of staying away from the talk of cuts, right? So yeah, sure, we're holding, but we don't want to party too hard just yet.
They don't have their hats on.
No, not yet at all. What do you think, Shane? I do want to bring it locally. There's some talk of interest rate cuts in sight here. Where are we on that?
Look, I think we, like the ECB and like the Bank of England, are lagging a little bit, because don't forget, US inflation peaked in, I think it was June last year at 9%. Inflation in the Eurozone and England, UK, did not peak until October. We didn't peak until December. So we're lagging a little bit, just like those other central banks. And so it's understandable that, we're not up there where the Fed is. But just as we lagged on the way up, we lagged at the peak. I think we're lagging on the way down, and therefore we will get there. It's just that it may take a little bit longer in Australia. I don't think the RBA is yet ready to pivot towards rate cuts. I think the message from the minutes when they come out next Tuesday will still be on the hawkish side. But our view is that if you look at the maths for those CPI numbers, the monthly CPI, some very high numbers drop out from the end of last year, November, December. November was 0.9% in the month. December was 1.5%. As those numbers drop out, I think we're going to see much lower numbers replace them, and that'll push our inflation rate down into the threes by the end of the year. That's the monthly number. The quarterly number will take a little bit longer to come down. That in turn will head off any rate hike in February, I hope. I think that's our base case. Yeah, still a risk there, but and then ultimately we'll move towards rate cuts probably later in the year, maybe could be June, but certainly through the September quarter.
When we look back at 2023, somebody I spoke to earlier this week said it was the year of migration, and certainly that record migration intake. How much do we focus on that in 2024 as well, in terms of when we look back at the jobs numbers, the number of people looking for work?
Yeah, when I look back, I sort of think 2023 was the year of disinflation. 2022 was a year of surging inflation and worries about much higher inflation. But certainly in Australia, big theme has been that massive intake of immigration, 518,000 people, highest on record, that took our population growth rate to the highest since 1956. So that's been a huge impact. If you want to know why home prices have gone up so much, rents and so on, immigration has been a big factor in all of that. You can see on that chart there how much inflation's come down in recent times. But I think, immigration has certainly been a big one. And it's probably, on the one hand, it's been a positive for Australia because it helps reduce the labour shortage. It stopped the economy going to recession, even though we've had average GDP per person going backwards. So that's positive. The downside, though, is that it probably has made the RBA's job on balance a little bit harder. It's added to demand, and it's certainly added to problems around the housing sector, and many Australians have felt that. So I think, the odds are we probably have now seen the peak. The government is moving to get it under better control. I'm not totally convinced that's going to work, but I think it'll certainly help. And as we go through next year, that will come down, and lower inflation, lower immigration might also help lower the inflation rate. As you can see in that chart there, our pipeline indicator for Australian inflation still points down for Australian inflation as we go through next year. But slower immigration may take some of the pressures off the housing market, which may take some of the pressures off rents, although the shortfall is still going to be a big factor.
Okay, Shane, I have my own pivot. I don't always get to host the COB here with Juliette, but I will get to ask the question today. Shane, what are you reading this week?
Or listening to?
Or listening to. I do listen to podcasts, usually in the car on the way to work and on the way back. But I actually want to talk about a book that I came across a few years ago, and a lot of Australians would have read this book. It's The Dry by Jane Harper. And it was funny, as soon as I saw that book in the bookstores, I thought, I know that name. And then it eventually occurred to me when I read the book cover and who Jane was, because about this time, often of an afternoon, I talked to Jane Harper when she was a finance reporter at the Herald Sun in Melbourne. And it was great to see her go on and have such success with these books. They are really worth reading if you haven't read them. But if anyone wants some light reading, I reckon you could probably go and find this one somewhere, more in format. Here's the story. I'm a bit of a baby boomer. I grew up with the Brady Bunch. It had a huge impact on me. I certainly wanted a massive house like the one they had, split-level house, and a massive convertible, which at one point I did actually have, big American convertible. So the Brady Bunch had a huge impact on me, along with Mr. Brady's wisdom that you never go to bed, you never go to sleep on an angry heart, which always makes me think that if I'm in an argument with someone, you've got to end it by the end of the day, if at all possible. do whatever you can to do that, because you never know what's going to happen through the course of the night. Bit paranoid, but I always like to stay on good terms with people. So they're certainly good books to read if you haven't read them through the Christmas period. Yeah. I'm still reading the fantasy novel I referred to a few weeks ago, A Time of Courage, and I've still got that Milton Friedman book, Free to Choose, going as well, which I find incredibly interesting. And it has a lot. It still relates to the issues we're going through today. But anyway, I might leave it there.
I wish I could read through that many books in a week.
Yeah. Well, when you're working in a library, that's so you just turn around, have a little break, and read some more.
And I also wonder if our very young newsroom know who the Brady Bunch are.
I know. I was about to say that. I love the Brady Bunch, but I'm just looking out to the producers who are half my age and wondering if they know who the Brady Bunch are. We can teach them later.
I know, we will tell them.
Rerun somewhere you could find them. Maybe one of the Channel 10 channels.
Maybe making a comeback.
They're probably free to wear.
Marsha. All right, have a great weekend, Shane. Thank you.
Okay, thank you.
Shane Oliver, AMP Chief Economist. Let's have a look, Tessa, at the after close leaders and laggards.
So where are we now? Core Lithium there topping our chart, up above 14%, just above Chalice Mining, Link Administration, Weebit Nano, just above 9, almost 10% there, and HMC Capital at 8.26%.
And to the downside today on what was a good day, but we have been scratching around for you to find those that might have taken some profits today. Telix Pharmaceuticals, Cromwell Prop, Mevaport, Dexus, Aluka Resources. I mean, really no big news around those stocks. So let's have a look at the small end as well.
We have, let's see there, Tamboran up above 18.5%, 40S Memory, and Zipco. We talked about this. I think one of our guests had this as his
Henry
pick.
Jennings.
Henry Jennings, there you go. His controversial pick. Vulcan Energy there and Experience Co as well.
Well, it's funny because Nadine and I spoke to him yesterday. He had his Santa hat on actually, and he said when he made that advent calendar, it was trading around 50 and it's now 60. So he's like, hey, listen to me. All right, let's have a look at the losers in the small end. Invictus Energy down 21%. MedAdvisor, Base Res, MyState Predictive Disc also coming under pressure. And in terms of what we're looking out for in the overnight session, we've got a raft of PMIs. This is really just giving us an indication on the global economy. Also, industrial production data in the US.
Absolutely. As we all know, now the focus is on demand and whether the economy is really going to pick up and, recession or not next year.
Data and restaurants coming through with numbers as well. And of course, it is Friday, but we're looking ahead to the week ahead. As Shane mentioned, the meeting minutes from the RBA's decision to leave rates on hold in December. The BOJ is a big one because, as we know, this is the discrepancy between their ultra loose monetary policy and what you're seeing elsewhere in the developed world.
I do wonder if they'll end the year with a bang in terms of news, if this change is coming.
The yield curve control change,
absolutely.
maybe, who knows? Third quarter GDP, a huge one for the US, and a couple of other things as well. Of course, PCE inflation data and business confidence. I mean, you flagged to me, was that yesterday or today, that New Zealand was starting to see a few recessionary
yes, that
indicators?
Was yesterday,
all the days sort of run into each other sometimes, don't they? All right, it is Friday. Yes. It is a good day on the market, a good week. In fact, let's have a final read on where the CBO 200 is, up by 0.8%. And just the all odds?
The ASX, it's up 7, where are we?
0.7%.
Yes, 0.7% there for 7,430, ending again in the green. And I think over the last 5 days, the index has gained 3.27%.
And up about 1.8% off its 52-week high. All right, that does it for Friday. But of course, as we know, you can catch up with everything online, ausbiz.com.au. A lot of great interviews today. What was your favourite?
As well. The interview. This week, I love the plot. I learned so much in the plot, so you guys should check that out.
Tessa hasn't lost the plot yet. All right. And I love talking diamonds because diamonds are a girl's best friend. All right. Have a great weekend. We'll see you on Monday.
See you.